Welcome friends. Let us start today's analysis. Today is 2nd December 2024. So as we generally start with, uh, see, every day's market moves or their strategies or patterns or anything, the trading of the current day uh, is mostly based on the previous day. So whenever we start previous day, we should understand the important levels. Whenever the market opens in the range of the previous day, like today it is within the range of the previous day, then more likely it will follow. We have to study previous day's chart, and even if it is out of the previous day chart, it is because of the previous day how it is behaved and how the market has um, come out of that range. That every time we have to watch the previous day market. So that is why we usually mark the important levels of previous day. So in previous day, if you see, this is PDL, previous day low, and this is PDH, previous day high. Now in this two, like if you have regularly following my videos, you will know that between these two, which one is important? PDL is important, because market moved from this point till this point, but market did not fail from this point much. So this can be treated as, I told you, single line will not be treated as zone. We have to take a bottommost wicks and then the solid portion up to this. So this becomes a demand zone, like, because from here market went up. So there is no supply zone for previous day. It's only demand zone, PDH and PDL, and I don't see any other important levels. So today's CPR is average CPR. Yeah, before that we have already marked this previously, because day before it fell big. So this has to be treated as this. This has to be treated as a supply zone. You see the top PDH will be supply zone till this top of this candle, because it fell big from this point. So this complete thing is supply zone. So let's see how market behaves today. Market, the first candle opened here and it broke the CPR. So this is usually we call it as a CPR breakout pattern, and with the first candle. So, and this is a big power candle. Now you have to understand, with experience you will know that, and I have told you repeatedly previously, that any big candle, first candle, is usually a trap. Market is less likely to go in the same direction. Okay, okay, this is based on the experience. Now based on the rules. Now rule is, if you take I've been telling you, avoid taking trade on the big candle, because where will you keep your stop loss? If you enter here, you know your stop loss will be above the candle is too big, and if you keep somewhere, okay, above the CPR is fine, but when you take twice of your stop loss, you see there is this PO, there is demand zone, and there is PDL. So important supports are there, and market in such cases can reverse from there, and it is very very like, it's a less probability to break this strong zone. So this is a low probability trade. Now usually when you take the trade, you cannot wait for such big stop loss to hit, and even if the stop loss is hit here, there is again PDH. So this is a low probability trade. And one more reason, if you like, if you can manage every day, like in my previous videos also I have been telling you to keep a watch on daily time frame. So let us see on daily time frame. Daily time frame, if you see, this is today's candle, this is 2nd December candle. Now you see it is exactly on the 20 EMA. So when the market opened above this 20 EMA, it is low probability, because 20 EMA will act as a support, and then it reversed. So and one more thing, like usually I say, you have, if you have to confirm the direction, what you have to do, top of the first candle and bottom of the first candle you have to measure. Let us see here what is the top and bottom. So if we draw a box, this is top and bottom of the first candle. Okay, now unless this top or this is like a range, this top or bottom is broken, you cannot. And you see this is defending. Okay, this like second candle could not break the low, third candle could not, it tried to break but it could not break the low. Actually third candle gave the indication that it is going to reverse. This is called as extreme candle reversal pattern. So this was the extreme candle, and then the second candle, third candle could not break, but the third candle has given the indication that it is properly a pin bar with a green small body and it is going to reverse. So some expert people, they will take the trade here on the third candle, but with with our rules and risk reward thing, even if we take the trade here, there is a CPR on the way, so this is a low probability. Although it worked, it's a low probability. Now with this, if you see the top, okay, now the first candle has broken the CPR, then again it went back, and this candle, this is 935 candle, it has broken the CPR the other side. Now this CPR has become less powerful. The first, as soon as the CPR is broken, it becomes less powerful, but it is broken twice. Like this candle has broken, and these two candles have broken it opposite side. So this becomes less powerful CPR now. Now anyway, this, if you think that 935 candle is a CPR breakout, it is not, because as per the rule there should not be any candle on the left side of that candle whenever the CPR is broken. CPR was broken by first candle, this was a CPR breakout, but not this one. And CPR breakout with why low probability, I have given you 2-3 reasons. So there was no trade here. Yeah, people with experience, they can take a trade on the third candle, considering it is reversed. And the most important is Nifty on the daily time frame. This is a 20 EMA on daily time frame, so it will take the support. Now this trade also can be treated as false breakout. How, I will tell you. Like this first candle has broken the bottom CPR, okay, then it got little consolidated, and this candle has broken above this bottom CPR, this bottom pivot. So what happens is this candle broke the bottom pivot and this candle closed above. So this is a false breakout. So one can go long here on this candle, stop loss below this, and then twice the stop loss is your target. See, it's not that there will not be any resistance on the way, but when there is a false breakout, it is more likely that false breakouts are more powerful than breakout, because there is a breakout and then there is a false breakout. So false breakout cannot be again false. So some concepts or some patterns you will see on a daily basis, you will realize how to consider or make use of them. So in this case, now this was a strong resistance here, the top of the first candle, and which is broken by this candle, but you cannot go long because there is a PDH will be a strong resistance, and although if you go, then there is this one, so there is no trade here. Now if you want to take a trade is one taking trade on this candle, the fourth candle, 930 candle, and stop loss below the candle or below the day's low, and twice the stop loss is your target, somewhere, maybe I think somewhere here, yeah, twice the stop loss. Let us try this. If I take the trade there, what will be my stop loss? Okay, this will be my false breakout trade, and for a better thing, let us take day's low, and this one is twice, so 1.2, yeah, here. So this line, maybe somewhere this candle, yeah, here on this one, your target will be hit. So yeah, this trade hit, and you have to wait. Once you take the trade for the first trade, you have to wait till the end. Then there will be some patterns followed after this trade. Like first you take the trade here, then you have to wait for your either target to hit or stop loss to hit. You are in the trade. Then what happens is, like I told you, this trade will form, then this trade will form, then this trade will form. Like this is broken the PDH, but PDH is not a important, like there is no we can say uh, supply zone breakout, because PDH is not supply. So it just broke the PDH and there is high, which again one can go long, but immediately there is this resistance and then this supply zone, so there is a low probability. So there is no trade till your first trade's target or stop loss is hit. Now in this case we have to understand that um, this yeah, the market, you know how this market is behaving now. You see, let us think on the, whenever you want to see a long, like positional or like what is the direction of Nifty, you can predict on the daily time frame. Daily time frame, what happens, this is the 20 EMA, it's going sloping 20 EMA, it's coming down, now it become flat. Now all these days the candles, or you can say the trade, was below this 20 EMA, then it came above this 20 EMA, then this candle tried to break the 20 EMA. Actually it came down only to fill the gap. As I told you, gap border was formed and market doesn't like gaps, so this candle, 28th November candle, came to just fill the gap, and this candle has broken the 20 EMA again, which is called as false breakout. So most likely now market will take the support on this 20 EMA and go up. This is my prediction. This is just a prediction, expectation, it can go wrong. Okay, so you always have a stop loss, and stop loss is your very important tool to um, uh, to minimize your risk and get the maximum reward. So that's it guys. I think whenever the market opens tomorrow, it will try to break, or within tomorrow or within this week will try to break this supply zone. As soon as this supply zone is broken, then it will be up move, because you see what happens here. You see this one, because there are big sellers here, you know, so many sellers, the market fell huge that day, and from this point to this point, and the people who have not covered their shorts, maybe they are waiting for retracement, and if somehow this level is broken, they are forcibly, they have to take their shorts, they have to square off their shorts, so automatically the market can go up. So this is how you have to read the market. If you have any queries, questions, you can write to me anytime. I would love to respond. Okay, thank you, bye bye, take care.